You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Yes, I'm calling for talking real money. This is Don. I'm the host of the show, and I'm just trying to call in. I'm calling long distance from Virginia. 855. Is this the number? 855-935-TALK. 855-935-8255. Did I get that number correct?
Please do not take that call, operator. Disconnect it immediately. I don't know how to block it, but please, if that's a possibility, get on it right away.
Yeah, this is spam. Scam calling. Hello, Don McDonald. Calling on the phone because for some reason I can't make the technology work anymore. I've lost my mind, and I think it's just the last week. The last week has caused me to lose my mind. Oh, my goodness. What a dramatic week. Plus, put us all on the same level, too. Tom's going to be sounding good, and I'm going to be sounding terrible for 1 week.
I appreciate that for a change. Yeah, what a week, huh? I mean, when you think back to all that's happened and then realize that the stock markets were up over 7% this week. 7% this week. Isn't that amazing?
I was talking about the election. Wait.
Yeah, okay. No. I was talking about money. This is talking real money, not talking real politics.
Talking real politics.
No.
Well, up until now, that's all they were talking about on Como was politics.
Well, that's true.
I was calling in to talk about the election. Never mind. If you're just going to talk about boring old money, I'm going to go somewhere else.
Well, and the reason I'm going to talk about boring old money is, it's kind of important. It could be central to your life. Really, it could be. Your life's going to revolve around it in some way, whether or not you want to pay attention to it. And here's the thing. Think back about a month or two ago and the number of people that wanted to be in cash or reduce their exposure to stocks during this period of time because it felt so unsettled, as elections generally do feel unsettled. And then you throw in the COVID and the rest of it, Don. And so a lot of people called us and said, should we do anything? And I guess I'll be saying this at my last breath. No, your asset allocation, your stock to bond ratio is about you. It's not about the rest of the world. So they missed out. And wow, we had a story today around all of this that is just shocking, where somebody called their broker and said, I want to move from 70% stocks to 50% stocks. This is about a month ago because this is worrisome. I don't know how this is all going to come out, what it's all going to mean. And what did the broker say, Don?
Oh, let's see. Was his name Ed? Was the
his
firm's
name was Ed.
The first name was Ed?
Yeah.
Come on. If a client calls, I was a broker once. If a client calls and says sell stuff, you sell stuff because that means when you buy back in again later, you get another commission. Are you kidding?
Well, there's that part.
Stupid.
There's that part. And again, I think many brokers just do whatever willy-nilly what their clients want them to do because it's the easiest path. It's the path of least resistance. And in this case, the broker said, sure, we'll move you from 70% stocks to 50% stocks. Here's the part he didn't tell them about. This is not qualified money. This is taxable brokerage type of money. He forgot to mention, the broker forgot to say, by the way, when you sell off that 20% in stocks, you will face capital gains. And in this case, the account is very large. It's going to be substantial. So any broker, any planner, any financial advisor worth his weight, fill in the blank, whatever it is, gold, salt, whatever, should have told him, A, no, your asset allocation is about you. It's not about the election. Number two, if you really have to do this, this is what it's going to cost you in terms of taxes. It didn't do that. And this gentleman was very upset about, after he thought about it, that he shouldn't have made the change and he should have thought about the ramifications. By the way, part 3 of all that is, when do you buy back in?
You don't know when to buy. There are no sell signals. I don't care what anybody's squiggly line says. There are no sell signals. There are no buy signals. Nobody says today is the day. And that's why we've worked so hard over the past several months during this whole very frustrating, angry election to keep telling you over and over and over again that elections don't affect the stock market. Even when the results are surprising, they haven't affected the stock market. There is no empirical evidence that any presidential or non-presidential election, even Senate and House elections, has ever really impacted the stock market. The stock market is driven by millions of people around the world doing business, buying things and selling things and making money and spending money, not by political changes.
And by the way, this year, it turns out, is going to be the second best presidential election week in history. Guess which one is the best week in presidential election history in terms of return for stocks?
Mr. Worthless Factoid, not bad.
I knew you would be unhappy. Folks, I didn't share this with him ahead of time, obviously.
This is going to be truly random on my part. Truly 100% unadulterated random. And I'm just going to do this because... let's see. We go to it wasn't him. No,
it was in the 20th century. You got that going for you.
Oh, good. A whole
that
100
helps.
Years. You narrowed it down to 100 years.
I know.
Oh, wait. Let's go for Clinton.
Nope. 1932, when the election of Franklin
FDR.
Roosevelt. 11% gain in stocks that November.
855-935-TALK, our number.
Tom and Don are talking real money.
Everybody needs help with their money now and again, and if you need more help than we can give in the course of this podcast or show, set up an appointment with one of our advisors for a free actual meeting with no obligation and no high-pressure sales pitch. Just go to vestory.com, that's vestory.com, or call 800-386-3004.
For your real life and real future, Tom and Don are talking real money.
Welcome back to Talking Real Money. I'm Tom Cock. Our telephone number, 855-935-TALK, here to help you with any money-related question. Any money-related question.
I thought you were going to say, hey, Duke, welcome to Talking Real Money.
You can see how much we practice these bits, folks. Just a minute.
Do it again.
855-935-TALK, and let's go to the phones because the Duke of Earl standing by. Duke?
Yeah. Hey, Tim. Hey, how you doing, Tim? It's good to talk with you.
Please.
You know, hey, no, really, listen, sincere. This is sincere. A long-time listener, first-time caller.
Yeah. Good to hear.
Thank you for taking my call. Thank you.
You bet.
I appreciate it so much from the bottom of my heart. I got a beef, though. You know, I was listening to your show. Like last week. I think you did it. Did you do a show last week there, Tim?
We did a show last Saturday. Thanks,
All right,
Duke.
I thought you did. Hey, a woman, she called in and said she had 20% of her funds to risk. And she wanted your advice. She did. She asked for your advice. And when I heard you tell her, if you put it in stocks, that's like going to Vegas. I turned your show off. I got to tell you, I did. I turned it off. That is horrible advice. I am an investor in the market, and it is not, I tell you, Tim, not a crapshoot. It is not. And if you do your homework, Tim, you can easily get a high rate of return in investments as well as you can using puts and calls. Just use them puts and them calls. So far in 2020, Tim, I am averaging 18% return rate with very, very little risk, Jim.
Okay, well, first, Duke, I got to say, normally we only talk to kings and presidents, so we're making an exception in this case, and we'll take in the Duke thing. Number two, I thought I heard you say it's Tom actually, but I've heard worse over the years, so I'm okay with all that.
So
now back to your.
Did I say Tom? I meant to say Tim.
That's okay. As I said, I've had worse. So, but let's go back to the question, the matter at hand. In other words, remember the call, and I remember it well, was I might want to risk some of my money in stocks because I'm a conservative investor and I don't want to take a shot. I don't want to go to Vegas. And our response was anytime you buy, and here's the important part, Duke, individual companies, that is a complete roll of the die, because nobody knows nothing about the future of any of those individual companies, whether it's Amazon, Alphabet, Apple, Novavax, Washington Mutual, Enron, WorldCom. You get the message.
Excuse me, Timmy. I need to interrupt for a minute there.
Yeah.
I did not say nothing about individual stocks, Timmy. I said puts and calls.
Oh, pardon me. Well, those are much safer, obviously, because in that case, you only have to figure out what direction something's going and put a timeline on it. That makes a lot of sense. Sure. I want you to be exacting with this. Yeah. So, no, we do not recommend puts and calls. We don't recommend options of any kind, again, because that's making a bigger bet, right? Because you're trying to come up with the direction of a security price, and you're trying to come up with a timeline. So, no, we wouldn't recommend any of those things. And, yeah, that is like going to Vegas. Truly, the track record is that people that do that sort of work, very, 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 very few of them make money, Duke. And so while I loved you in the 50s, I'm not so big on you here in the 2020s.
The proceeding was a reenactment of an actual caller email, modified slightly to fit the characterization.
Yeah, slightly. So no, we appreciate. By the way, we get a lot of these through email, because a lot of you are shy, as you're apparently being right now. But I will give the number again: 855-935-TALK.
I got to tell you, they're going to be a lot less shy about calling the show when I start acting out their letters.
That's true, because they might not like the caricature as much as they would prefer their own.
You never can tell. And, we've still got several of them to go. So if you want to keep me out of character, give us a call at 855-935-TALK, 855-935-8255.
And that is Don. You're hearing him on the phone because we're having some technical issues. We're trying to still resolve. The tin can between my place and his had to be moved due to the fact that he left Florida and went to Virginia, hiding in the hills there, where apparently it's safer, cooler, and easier to live. So he's hiding out there, and the connection's not been made yet.
Apparently the internet, though, issue is not what it – I get, it's not – I'm sure it's not the problem. The problem is not the internet. The problem is the fact that the technology that we use from a company called Tyline is I love the technology, but I have to tell you, Tyline people, you can't hear me? What? Really? It says I'm on the phone. Como, am I there still? All right, we're going to let Tom talk. Go back to your microphone. Are you gone too? Oh, maybe. Okay, I guess maybe Tom got disconnected. You don't have Tom. Oh, well, that makes sense. Hi again, everybody. What we're doing is we're making everything a really level playing field for you. So
I'm back. I was out. I'm back.
How'd you get gone?
It's like Arizona. 1 minute it's one way, 1 minute it's the next. So I have no idea, but I'm happy to be here.
Like
I'll
Arizona.
say that.
It's like Georgia. It's like Pennsylvania.
1 minute it's this, 1 minute it's that, and who the heck knows. But back to the question at hand.
Yeah,
Duke,
ahead.
we get excited about questions like this because, again, what you see as investing is really speculating. I mean, in other words, you are making bets on certain things. Investing is exposing your money correctly to widely diversified groups of stocks. It has nothing about picking trends. It has nothing about deciding which of the vaxes will be the best one or the best technology firms or the best any particular stock. You're going to own all of them. You're going to do it at a low cost, and your ratio between owning those and the less risky things like bonds, that's going to determine your rate of return. It has nothing to do with you trying to pick all the rest of that. Again, and the people that do this regularly, right, that spend hundreds of millions of dollars on this, hedge funds and large institutional investors, pensions, etc., their returns are worse. They don't get market returns. So we're into market returns. We're happy to take those over the long haul. They've been very satisfactory. The rest of it, again, I'd say, Don, is just pure speculation.
Well, but it really does, though. It comes from a deep-seated issue that human beings have. It's our desire, it's our need, really, to feel like we're in control. we're in control of everything. We want to be in control of our life. We want to be in control of our money. We want to be in control of our decisions. Most people don't like handing off that control to, say, the market. Well, the market goes crazy at times, and I don't like leaving it to chance like that. But it's not. 855-935-TALK is our number. Give us a call, please.
Tom and Don are talking real money.
If you don't have a financial plan, well, sometimes you just need a little help getting started. And we offer that free help to anybody in a meeting with one of our fiduciary advisors. To set one up, just go to vestory.com, vestory.com, or call 800-386-3004. There's no obligation, no cost, and I promise, no sales pitch.
Your guides to a really great financial future. Tom and Don are talking real money.
Welcome back to Talking Real Money, here to answer all of your questions about money, about investing, about saving, about anything that has to do with dollars or dineros or whatever it is. You gotta know. You gotta take care of yourself, because no one, as someone once told me, will care about their money as much as you will. I mean, it's your money, right? So the number, 855-935-8255. I do want a program note very quickly. Don, in addition to only being on the phone right now, will be gone next week. So I will be here, and we've got some couple of special guests. Got a brief interview with our friend Paul Merriman and Larry Swedrow. So the show will be a little bit different next week. Now, a lot of you took money out of your, we'll touch on that in a minute. You're waving your hand. You have a question for us.
Oh, wait. Yes, I do, sir.
Okay.
I wanted this one. I should. Oh, yeah, I should. Well, no, I'm not going to do it because it's from a woman, and I'm not going to do a good woman.
No, please do not. Actually, your woman's not bad, but let's not.
All right.
That's only if you're wearing the appropriate things.
Of your question, I'm calling in, sir, with this question for you. Are you ready?
Yeah.
It has something to do with Vanguard service again. I know. This is surprising. With reference to the Halloween weekend podcast. That was last week. On November 3rd, I called Vanguard to do a transfer of assets from a traditional IRA to a Roth IRA, both accounts at Vanguard. This would cause a taxable event which I would have to pay with other funds. The representative sounded young. We had some trouble understanding each other. Apparently, I used some buzzwords that she was misunderstanding, and she had the same problem with me. The transaction took about 20 minutes for her to complete. I am assuming many of the experienced representatives have been replaced for other reasons, so everything takes longer because of a lack of experience. I guess she's explaining what might be going on at Vanguard.
Well, again, and this is on a podcast, which I believe has already been sent out to those of you listening to the podcast. Yes. So because it's come up, we got it seems like a flurry of these questions. So as you know, we have for many years just say go to Vanguard and own a couple of index funds, VT Wax and VBTLX, which by the way both are having now great years. And then people have been writing us saying, well, we got this problem with Vanguard, that problem. Here's what I mentioned on the podcast, and here's what I think you should keep track of. Number one, you can go, and we put these up on our website, you can go to Fidelity and Schwab and own similar types of global index mutual funds at a lower cost. So if it's just about the cost, all you want to do is go open an account, do that. I see no reason that Vanguard has to be the place to go. We very sort of lazily just said Vanguard for a long time.
We did, and it was really just it's momentum. We just have
inertia
been for so long. Inertia. We now have up at TalkingRealMoney.com. There is a section where you can explore show topics. There's an older woman listening to our podcast. And there I just last week put up our 3 funds from 3 fund groups. So we have a 3-fund choice at Fidelity, a 3-fund choice at Schwab, and a 3-fund option at Vanguard, just to compare apples to apples to apples. And they're all
and I think
almost identical funds, by the way.
Yeah, they are all. And again, there's some Fidelity's got some cheaper products, as does Schwab, frankly, than Vanguard's. Shocking, but true. And again, I think we have to remember what Vanguard is. Now, Fidelity and Schwab are for-profit organizations, right? Schwab is owned by its shareholders, and Fidelity, I think, is still owned by the Johnson family. So it's a different setup. At Vanguard, remember, the people that own the firm are those who invest in it. It's like a co-op, right? And so when things grow, and they've grown dramatically at Vanguard in the last 10, 15 years, it's often harder, I think, for Vanguard to keep up with that because they have to be careful. Every fund has to break even. It's kind of a fascinating thing. They can't have some things working and some things don't. And Vanguard has added a lot of things in the last few years. They have an advisory service now, which I don't strongly favor, but I think if you just need an asset allocation, it's okay. They've added all kinds of other funds that we have been critical of, alternative funds and stuff like that I'm not sure your need. But the bottom line is, you just want to own 3 index funds for your future. You can go get them now, not just at Vanguard, but at Schwab and at Fidelity.
855-935-TALK is our phone number. Call us just like I am, 855-935-8255. It's free and easy.
Tom and Don are talking real money.
Before you end up buying a financial product that you'll regret later, either call us on the podcast or the show, or if you need a little more time, that's why we offer free meetings with our fiduciary advisors at Vestory with no cost, no obligation, and no high-pressure sales pitch, I promise. Just give us a call at 800-386-3004, or better yet, just set up an appointment at vestory.com, VESTORY.com.
Reality radio for a really great future. We're talking real money.
Thank you for joining us here on Talking Real Money every Saturday live. And then any other day where you have a question, you can call us, 855-935-TALK. That's 855-935-8255. And again, if you're shy, you can go to our website, send us a question there. We get a lot of those as well. You know, one of the things that came up this spring, Don, that I was a little unhappy with when Congress made it easier for people to move money out of their retirement accounts. I know people need money. It is a tough time for many people. And gosh, just read yesterday, they still expect about a third of restaurants to go out of business this year. Shockingly high number. But so people started tapping into their 401ks, and it looks like it's about 5% of people that are in 401ks that started taking money out. And of course, Congress let you take up to 100,000 without the penalties. So that was okay, I guess. And then here's the part where I really start to struggle more. Is UPS and other companies are now making it easier for people to move money into a Roth 401k and then to be able to access that for emergencies. And my struggle is, I think you should make it really hard for people to move money from their retirement accounts to spend it, because you really want to make that the absolute last resort, don't we?
Well, and there's a good reason for that. You see, we've been accustomed for most of our lives, and the lives of our parents particularly, to think about money we have in the bank, money we have in our investments. It's there if we really, really need it. But that was because there was a time, and in fact, there will be a time in the not-too-distant future where this is going to be truly ancient history. There was a time when a lot of Americans, a large percentage, I would say even a majority of working Americans, were covered by a pension. So there was always an income of last resort that you could count on. So you could save for retirement, as many did, or save for things. And if an emergency came up, taking it out back then didn't destroy you. Today, it could destroy your future, and it's very difficult for anybody to live on Social Security.
It really is. By the way, those of you tuning in for the Joe Biden speech, you need to wait a little while longer. They're still looking for Jim Carrey, who's been unavailable this afternoon. So when they find Mr. Carrey, they will get him to make the speech here in just a little bit.
I thought we weren't doing any political humor.
Oh, okay. Sorry. That was too easy. But back to the 401k. So, because again, you make the very good point. For most Americans, especially people under the age of probably 40, pensions, unless you work for the government, are going to be few and far between. Private pensions, almost non-existent. So therefore, as you point out, Don, then you got to be saving for yourself. And when it comes to this kind of, I try to tell people, if you can afford it, max it out. At least in your company plan match or save up to the match. So you get all the free money from that company. Then you got to build the right asset allocation. And we have a bunch of these plans up at 401411.com. You can always send your plan, but we have a lot of major company plans there. But again, using that money for any circumstance other than the absolute dire. I mean, I guess I'd say if you're going to lose your house, you could take it out. Sure. Right.
Well, I would, yeah, if it's a true dire emergency, but if it's just to pay the cable bill, and I'm sorry, I don't think the cable bill is an essential. If it's to pay the utilities to keep the air conditioning on in the summer when it's not that hot in Seattle, then, those are on the more frivolous side. If it's to keep the heat on in the dead of winter, if it's to keep food on the table or to keep a roof over your head, those are essentials. Otherwise, that money should truly be sacrosanct. It should be untouchable. And I don't even think it would be a bad idea to make it more difficult to get at. I believe that this money maybe there should be an even bigger penalty to get money out of your 401k, your IRA, just because today and tomorrow, going forward, there isn't going to be a stopgap. You're going to need this money to take care of you for the rest of your life. So fund the heck out of your retirement plans, invest them as best you can, and then make sure you leave that money alone for as long as you possibly can, even on into retirement. It's one of the reasons why a lot of people are going to have to start working or keep working longer, not going to be able to retire as early. Give us a call, 855-935-TALK, 855-935-8255. It's absolutely free. It's really easy. We'd love to help you manage the money matters that matter to you.
Tom and Don are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
For your real life and real future, Tom and Don are talking real money.
Welcome back to Talking Real Money. I don't oftentimes get to blame Don enough. He blames me a lot, so this time I get to blame him. So the fact that he's on the phone means that you're not. You're trying to call us. The phone is ringing, and we can't answer it right now. But maybe next hour. We'll try again. But so hold those questions. Call us at 1 o'clock, and we will try to answer them for you. And as I said before, you can always go onto the website, talkingrealmoney.com, and send a question in there because we get a lot of those. That was a pretty light admonishment. Yeah, no, I mean, that's pretty light. I didn't really beat you up too bad, right?
Well, I don't know. I've been a little sensitive today, so.
You have been a little sensitive today. That is true.
I know. Yeah.
I'm not going to mention the number.
Week, Tom.
It has been a very tough week. I know.
Presidential election, the COVID thingy. Yeah. Driving to Virginia.
Yeah, a lot going.
Yeah, I'm trying. So, yeah, you can't call us, but I do have a question. Would you like to answer a question?
I'll try.
Oh, you can do this one. You're really good at these. This is about the Boeing Supplemental Savings Plan.
Oh, gosh.
What? You do a lot of this.
Okay, go ahead. I'll try.
All right. Gee. I currently work at Boeing, and I am a good saver. Maxing out my 401k/VIP, which opens up the option for the Boeing Supplemental Savings Plan, which is a non-qualified savings plan.
Yep.
With the current market for airplanes and all of the restructuring that is going on, I'm trying to get a sense of how much risk I'm taking using this as an investment vehicle. If Boeing were to declare bankruptcy at some point, am I going to lose everything? Should I reduce the amount I'm putting in the 401k VIP, currently 30% of my earnings, so that I don't exceed the cap and still get all of the Boeing matched funds? Thanks in advance for your thoughts on this topic.
Okay, well, first of all, the money that goes in post-tax, that has nothing to do with Boeing's business model or their future. That's your money. It's
only
invested
if you put it
properly.
all in Boeing stock.
Well, that's true, sure, but you could do that other ways. I mean, okay, first let's step back. Number one, no, we don't recommend individual stocks. So if you're investing in Boeing stock, I think that's a bad idea, although we own it, but we own such a very, 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 very small part of it in index funds that it's not a big deal. Number two, I do not expect, and I'm going to make a bit of a prognostication here, I don't think Boeing's going to go bankrupt. I think they are truly one of those companies that are now part of the fabric of the United States. And frankly, that expression too big to fail, I think, comes into play here. But that's a separate issue. Saving for retirement, if you can make it hurt a little bit and save all the pre-tax money, get the match, and then do this other money post-tax, absolutely. That's going to be your money no matter what happens to Boeing. I think for you, because you kind of suggested what if something bad happens to Boeing, then your employment may be terminated. I would be looking at your plan to say, do you have money set aside, sort of safe money that you can pay yourself if your job goes away? That would be a separate issue. But the idea that something happens to Boeing and then your money in these supplemental retirement plan goes away, those two are not related.
And there are good diversified choices within the Boeing plans so that she doesn't have to worry about one market segment.
Yeah, the VIP is a good plan. It's very inexpensive. The asset allocation is okay. It's not great. It has large. It has small. It's got a little bit of international large. It doesn't have a lot of the asset classes. By the way, this week, guess what the best performing group of stocks was, Don? Another worthless fact that you will not know the answer to, so I'll just go ahead and tell you.
The best performing sector? Or
yeah,
group?
like asset group, or, I guess we could say.
Wait, hold on. I'm trying to conjure this up.
You're gonna be wrong because I know what you're gonna say. Go ahead.
I'm gonna say small cap value.
That's close, by the way. Small cap value. The premiums were paying well this week on small and on value, but the best performing group of stocks was emerging markets. Now, go tell me why, because I don't know. But emerging markets had a huge. Can I say huge still? Huge week. Absolutely huge week. So, that's why you own all of those things, because nobody knows what's coming next. John Bogle's so right. Nobody knows nothing.
I got to tell you, I don't think anybody I don't remember hearing anybody predicting that emerging markets were going to go hot all of a sudden.
No, those riskiest of countries, et cetera. No, there's no way.
In fact, the future of anything is impossible.
I had dinner last night with a young woman with my son, so I don't want this to sound wrong, who's from a South American country. I'll just say it, Colombia. And we looked up the Colombia stock market. I'm not sure if we're invested in it, but the Colombia Colcap, COLCAP, the index fund in Colombia holds 26 stocks. So it's pretty limited. I don't know if we're invested.
And that's the whole market index.
I don't know if that's all the stocks they have in this index. So I don't know that part. But anyway, the point of the matter is you should have exposure to some of those riskier places, because over time, by the way, there was a 10-year period where emerging markets beat the pants off of everybody, and then they haven't. Nobody knows what's coming next. You just want to have exposure to those. So back to the question. I would save as much as I can until it hurts pre-tax, at least get the match. And then if you can afford to put anything in the supplemental, absolutely. I would go ahead and do that and not worry about Boeing's future, because that is not related to your retirement savings.
One of the reasons the Colombia market may be small is, a lot of their bigger companies aren't publicly traded, like Cali Cartel Capital. Or
I knew
Medellin
you were going there. You are so mean. I went the whole dinner without raising that, so I was pretty proud of myself, actually.
Oh, come on. You had to have
leave it to you
in the background or something.
No, we were in an Italian place. They were doing the American Mafia songs instead, so it's okay.
Oh, okay. All right. I think fair's fair. If we make fun of them, they should make – and we should all make fun of each other a little bit instead of just being so uptight.
Most people, yeah. Speaking of things to watch, I did just watch a special on the Comedy Store in L.A., and a lot of the comedians at the end said the problem with the world today is nobody can laugh at themselves. And you get up on stage and you try to push the envelope with all this stuff, and then people take the one little excerpt out of everything you said, and they say, see, he's bad to the, it's like, no, I'm just trying to get a laugh here, and nobody can laugh. So that is, I think that's a big problem in the world today. Hopefully that will be changing. These things go come in and they go out.
Well, I had to bring my ego down a notch and go on the phone today just because.
You still sound great, by the way. And I got to say this because we were looking at each other. You look marvelous. And big surprise today. I got up. My wife went to work out downstairs, and you were out for a walk. So I think the world is shifting here in some way. There's something I don't know about, but.
Well, I was out for a walk because it was a gorgeous day. I mean, just stunning. Walk down the street to the farmer's market because I'm in the little town of Abingdon, Virginia now, which is this quaint little town. Was founded in 1776.
Really?
Yeah. So it's got
that's a couple of years ago. Yeah,
it's got age on it. And there was a little farmer's market there every weekend, even in the fall. So we walked down there and we walked around and looked at all the people who aren't visiting all the stores and the restaurants and the theater. And I mean, the whole place is just dead because of this is a touristy town. It's there's a theater here. There's a beautiful old turn of the century hotel or turn of the 18th century hotel, 19th century. And it's just dead. Just absolutely.
Well, I will say it, and I hope it's not political, but I do hope now that the election is behind us, that Congress can get back in and figure out how to help some of these people and some of these businesses, because the pain will deepen if they do not.
Yeah, we gotta help. It's a mess. 85. You can call this next hour. We hope 855-935-TALK. Otherwise, you can send questions in at talkingrealmoney.com. Hit the contact form.
Tom and Don are talking real money.
Everybody needs help with their money now and again, and if you need more help than we can give in the course of this podcast or show, set up an appointment with one of our advisors for a free actual meeting with no obligation and no high-pressure sales pitch. Just go to vestory.com, that's vestory.com, or call 800-386-3004.
Your guides to a really great financial future. Tom and Don are talking real money.
And one way we've been trying to help everybody get educated about money, and we really don't talk about a lot, is our outreach through our advisory firm, which is called Vestory. We help anybody. We don't charge anything. There's no obligation, and there's no high-pressure sales pitch. If you need a half hour, an hour to help get on the right track, we will help you do that, and it's free. You just go to vestory.com, vestory.com, and set up an appointment there. There's a form to set up an appointment when it's convenient for you, and we'll try to help you. You may need a second opinion, getting a plan started. Just go to vestory.com and set up an appointment.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That should keep the lawyers happy.